Jorge, what would be on your checklist for the new presidency? You mentioned the first 100 days and there will be a lot of scrutiny. What would the areas in particular scrutiny be in your mind?
Well, I think the first and foremost will be building that political consensus. Are they able to do so? Are they able to build the coalition? Are they able to put a new government into place? And once that new government's in place, then they can start to engage the IFIs, the international financial institutions such as the IMF. So I think that's one of the first things. I think addressing corruption, as Tomasz said, will also be something that will be very important for the international and the domestic business community to see that there is a plan that's being put into place that will help to address that. We understand that that won't happen within the first 100 days in regards to the eradication of corruption, but at least seeing a concrete plan in place that will help to drive towards that end goal, I think, is going to be also very important. We're also very much looking very closely at the new presidential administration and their desire to build an economic team led by Ms. Akimova that will help to understand where exactly the country needs to be in regards to getting back some of this fiscal discipline that we had in the past that we've lost sight of for the many different reasons. So I think those are the three key issues that we're looking at in regards to giving us a sense of where we're going to be going in the short and medium term.
If we can just look ahead slightly beyond the next, say, few months to the coming years of the Yanukovych administration, what sort of role do you see playing in the development of the investment climate? For example, Euro 2012 and the two free trade zones that are currently being discussed: the Russia, Kazakhstan, Belarus free trade bloc, and of course the European Union free trade zone.
Right. I think from the Euro 2012 perspective, Euro 2012 is a big issue for our organization. And Euro 2012 is a big issue, I believe, for the international investment community as well as the domestic investment community for a couple of reasons. From our perspective, basically, these are very large-scale, long-term projects. Unfortunately, Ukraine, to this point since independence, has not been very effective in attracting large-scale investment, large-scale, multi-billion-dollar investment projects. Why? At the end of the day, as we discussed before, the rules of the game change too often. And these large-scale investments need a sense from the investor that there's going to be stability in these concessions agreements or in these public-private partnerships that will last for 30 years, that won't change when a new government or a new president is elected. A new government comes to power, a president's elected. So I think, from our perspective, the legislative and regulatory base that will allow these large investment opportunities to take place that will support Euro 2012 and the legacy that this infrastructure will leave behind is critical for us in regards to Euro 2012 and its successful implementation. So that will remain a priority. And then in regards to other issues that, I'm sorry, I forgot what the
free trade.
Free trade, okay, sorry. So from our perspective. Then on the free trade agreements, what we've heard very clearly from the presidential administration has been that the Russia, Kazakhstan, Belarus free trade agreement is no longer really on the table. We hope that that's actually the case. Ms. Akimova has mentioned that. Ms. Gurman has mentioned that. Mr. Lavochkin has mentioned that as well. All three people that are very close to the president, understanding, and the quotes that we were hearing in the discussions that we've had, they made it very clear that they understand that that would be against the agreements that Ukraine has undertaken in regards to WTO. Mm-hmm. And one of the other things that has been very clearly communicated is that Ukraine will abide by its previous commitments. So that's, I think, something very important that the international diplomatic and the international business community is looking at is, will we stick to previous agreements such as WTO, which we think is a very beneficial thing for Ukraine. In regards to the free trade area with the European Union, we're also seeing, we've seen a lot of movement from the European Union since the inauguration. We've seen the European Parliament put together and pass a resolution recently, really giving Ukraine a very clear mandate for potential partnership and accession in the future. So we, at least that when we're reading between the lines, that's what we're seeing. So I think there's a desire among the European Union to get the free trade agreement done. I believe that there's a desire among the people around the president to get the free trade agreement done. It's a win-win situation for both the European Union and Ukraine, and we believe that it's going to move forward, and we're going to do everything that we can within our power as a business association to try to help that process along.
Tomasz, in terms of the European Union Free Trade Agreement and these recent very positive signals, as Jorge mentions, have been coming out of Brussels since the election of Yanukovych, how important a factor is European integration and access to EU markets for investors looking at Ukraine?
I come from the Czech Republic, and Czech Republic was also a country that was integrated within Eastern Europe, both economically and politically, back in 1990, and 90% of its trade was with countries of Eastern Europe. Between 1990 and 2000, that has changed completely. Once free market was introduced, the flows of trade have been completely redirected, and by the year 2000, approximately 80% of the foreign trade of the Czech Republic was with the EU and other international countries, but the EU has become, and by now, by the year 2010, EU probably accounts for 85% of the foreign trade of Czech Republic. And I think Ukraine is moving in the same direction. It is taking a little bit more time, but in the year 2005, EU has also become the largest foreign trade partner of Ukraine, and the share of the EU is increasing, both in terms of imports and exports. And it is, for Ukraine, the biggest market around. Russia and Kazakhstan and these markets are also relatively large, but if you look at the GDP of the European Union and the GDP of the CIS countries, EU is larger by a factor of 10 or more. So logically, the most important market for Ukraine lies to its west. And free access to this market is extremely important, will benefit all Ukrainian companies, and will help with convergence, because if you open the borders for trade, for the free movement of goods and services, it clearly benefits the countries that are less developed. We have seen that in Central Europe, where countries, again, like Czech Republic, Hungary, Poland, Slovakia, their GDP per capita over the last 20 years grew substantially, mainly thanks to the free trade with Europe. It's now at the level of about $20,000 per capita, which is about 6 or 7 times higher than Ukraine currently. And Czech Republic has now GDP per capita, which is equal to about 65% of the level of Germany or Austria or other developed Western European countries. So I think for Ukraine, there's no need to reinvent the wheel. You just need to look at countries that lie on its western border and repeat the successful things that those countries have already done.
That's all we have time for today, gentlemen. Thank you very much for your participation. We'll see you next week on Investing in Ukraine, Europe's Final Frontier.